Let's move from silver onto gold. You know, over the past year, the ratio's dropped, the gold-silver ratio, the number of ounces of gold, silver to buy an ounce of gold, has dropped from about 65 or so to as low as around 31, 32. We've bounced back up a little bit. We're still in the 30s. What's your thoughts here? Is the ratio going to continue to fall?
Well, yeah, that's our belief at Sprott. I mean, my partner Eric Sprott is particularly strong in this point. He thinks that we will go back to the historical lows, which have been like 10 to 15 times. I mean, the fact we've gone as quickly as we have from in the 60s into the 30s, one shouldn't be surprised at a correction. I mean, nothing goes in a straight line. Mm-hmm. And in this field, as you know, the corrections tend to be violent. And we're in the midst of a violent correction. But no, that doesn't have anything, doesn't affect the longer term direction, which I think probably is towards the historic lows. I think gold's going up a lot. Silver's just going up more. And it is manifestation of it's a greater physical shortage of silver in the world than there is gold.
From here going forward, over the next couple of months, will silver climb more rapidly than gold in your view, or is it hard to say?
I would say yes, once the correction is over. Like one thing I've learned from hard experience is you don't call bottoms in these short-term corrections. They can go far further than you think, rationally. But once that's behind us, yeah, I would think silver would reestablish its preeminence in terms of upside potential.
I guess the extent of the correction is sort of a reflection of the amount of leverage that was used on the way up.
I guess it is. You know, the fact is I always marvel at these people that get cleaned out on COMEX because, I mean, you can see these things coming. I mean, there was the confidence index, which had silver up 96% confidence, however they measure this. Mm-hmm. And I mean, traditionally, that's been a very big red flag. If you're long paper silver when this confidence stays at 95, 96% for weeks, you are probably going to get hurt. And this is exactly what we've seen.
If you're trading paper.
If you're trading paper. If you're trading silver that's paid for, physical silver, you just go, that's just part of the game. And boy, we're getting an opportunity to buy silver at a great price again, physically, here very shortly.
Yeah, that ratio that you're referring to is back in the 70s, which has recently been a good indication that we're at or very close to a bottom.
Boy, it fell quickly. I mean, it went from 96 to, I saw it yesterday, it's 77 or something. I mean, I hadn't seen it fall quite that quickly. I think it was about 2 days it took to go from, 20%.
Yeah, that's right. I've never seen it fall that quickly either, not with regard to silver. I've seen it occasionally with regard to, I think, the Swiss franc years ago, but I don't recall it ever falling that rapidly with regard to silver.
But, what's been amazing to me is that no one, or I shouldn't say no one, very few people foresaw the upside potential in silver and what's already been achieved. And consequently, I mean, as this thing has unfolded, the mainstream press has been absolutely to a man negative. I mean, your psychological backdrop to this for much higher prices is terrific because the sentiment is just not, in sort of a mainstream sense, is extremely negative. I mean, and people will all be sort of taking credit for calling this correction. But the fact is they never called the upside either. So yeah. I take it all with a grain of salt.
Yeah, I mean, it's curious that people are calling this thing a bubble when in fact the U.S. government debt is continuing to grow without any kind of limits. Spending continues to go. The dollar index, the dollar against major currencies is pretty much weak and in major downtrends. And to me it seems like the bubble is the dollar or U.S. government debt, not gold or silver.
It's unquestionably that. Now, I think perhaps the hardest thing for the average person to understand, because I don't think their minds think in this channel because they don't deal with this on a daily basis, it's not the price of gold and silver that's changing. It's the value of the paper currencies that they're being valued in.
Yeah.
I mean, gold and silver have been constants for centuries. And they come and go. Paper currencies come and go, and as you know, every single experiment in fiat paper currency in history has ended disastrously. And with all evidence what's going on, we're going to have a similar occurrence this time.
Yeah, what I like to do is I like to use examples so people stop thinking in terms of dollars and start thinking in terms of gold and silver. And one of my favorite stories is that when I was growing up in the 1950s in the States, my parents could drive into the local gas station, fill up the family car with $2 silver. And today you can still do that with the $2 silver at the face, not at the face value, but at the silver content at the market value. And it just goes to show, the consistency of gold's purchasing power and silver's purchasing power. And in fact, the problem is really that we calculate in terms of dollars and we lose sight of what's really happening to the purchasing power of the dollar.
Well, that's one of the few advantages of being old. You remember what things used to cost. I used to always complain that my mother would say how cheap things were in the Depression. Well, I mean, I'm sort of falling into the same trap now. I remember how cheap things were in the 1950s. And I mean, all it is, it's all currency debasement.
Yeah, it truly is.